Oh, welcome back. Shares of Spotify under some pressure today because the stock was downgraded to underperform at Evercore. They call the music streaming service a pure play on a loss leader category. We've made it our call today. Josh, we see Spotify primarily as a tool for tactical trading. With the stock now back near 160, our view is the risk reward is tilted back in favor of rewarding the shorts.
Well, to their point, it's been bouncing back and forth between 100 and 150. So that range does seem to be legitimate, although it's at the higher end of that range. And if this tactical call ends up being wrong, you could have a legitimate breakout here. So, I would kind of wait for it to fail prior to saying it's going to fail. I mean, just from a technical perspective. Fundamentally, it's interesting. Between this and Slack, the two most high-profile direct listings on the New York Stock Exchange, it's almost as if nobody really made any money from these companies coming public. There were no underwriters. So there's nobody to really support these names in terms of research. They don't have any champions. And I don't know if that's something that Silicon Valley looks at for the next 3 or 4 direct listings. That might be a negative. I don't know. But so far, that's been the case with these two.
That's an interesting point.
It's a great point. But back to Spotify, I don't see any difference between this and the thesis that we heard on Sirius XM. And the stocks never went anywhere. They're a great trading
Which now owns Pandora.
Yeah. So they're commodity businesses where the profitability is just out there maybe.
The title's going to fade, and I feel like Apple Music just runs away with the whole thing.
I wonder if Josh's point, though, is something that needs to be delved into or in a little bit deeper. The lack of a so-called support structure underneath a name like this, and whether that is something that you need to keep an eye on.
It's a great point, but there's always business to do with these companies, so you still have bankers going after them.
Yeah, but you still been.
Well, they're European too, which is another wrinkle. This is like Amsterdam or something.
That's a major wrinkle.
Right.
Yeah.
Right. But I mean, we all understand the ecosystem of the investment banking model. I mean, we all see that's there. And so I think it is interesting if you did a broader study to see the correlation of those stocks and future returns. But definitely you need those companies to champion. From an IB standpoint, those stocks.
Right. So, if you're let's say you're like I'm just making up this name. Let's say you're Morgan Stanley and you brought Spotify public, and you see the stock trading in a range, but now it's at the upper end of the range. Your name is on this stock still. You can come out and say, hey, we think third time's a charm. At 150, it's had trouble. Fundamentally, blah, blah, blah. You could get this thing going. Maybe not forever, but they don't have any firm that's got their nameplate attached to this thing.
And follow through. Then you do a non-deal roadshow, and you have the salespeople at Morgan Stanley who say, hey, come see these people rather than a PR firm.
Yeah, learn the story. Come learn the story.
No, I'm not seeing them. You've got nothing to give me, so I'm not doing you a favor.
I think it's a great observation, but I think Spotify just is challenged in terms of the business itself. Think about the margin compression they're constantly going to fear. Their competition can lose money at will in the music business and get away with it. At will. Amazon.
Right, because they're making money elsewhere.
Apple.
So they almost don't care.
Even TikTok to a certain extent. And then you hear a company like Spotify talking about, okay, we think a new opportunity is going to be in podcasts. That's telling you the fundamental challenges that they have.